Welcome to the fundamentals of real estate. I'm sorry if we're going to get mental today,
Very mental,
but we
yeah.
may be talking about numbers. I'm just saying. All right. Okay. So our question of the day is, when do I know, Glenn, when it's time to refinance?
Yeah.
All right.
It's
This is a
great
big
question.
deal.
And you
All
know, a
right.
lot of times now, because we saw the rates go up from 2.5%, 3% to 7.5%, 7.75%. It's been a tough 3.5 years.
Yes, it has.
But a lot of times we bought that house thinking, well, rates come down, I'll refinance. And we talked to a lot of those people that were at 3%, 2.5%. They didn't start there. It was very few of them that started.
That's correct.
A lot of them started at 6.75%, 7%.
And
They refinanced to 4.5%. They refinanced to 3.5%. They refinanced multiple times.
And this is part of building your wealth. So we are here to help you
100%.
build your wealth.
Because
and this is definitely a big deal because over 30 years, even a reduction of $75 can be $20-something thousand, right?
Yes.
Or more. So when we're talking about when is it time, it just means how much lower of a rate do I need, Glenn,
and
in order to refinance.
the other thing to consider too is it doesn't always have to be lower as far as the monthly payment. We could say I'm going to lower the term. So I could say I'm okay with my payment right now. Why should I refinance? Well, you can keep your payment the same, refinance, and cut 5, 10, 12 years off the loan.
Turn a 30 into a 15-year.
Yes.
Which, you can do on your own too, but sometimes that's worth it. So let's get specific, Glenn, because I'm going to need to know numbers.
You're a numbers person,
I'm
yes.
going to put my glasses on for this one because we need numbers today.
So one of the things that's going to determine when is it right to refinance, obviously, we'd want the interest rate to be lower. Unless we're doing a debt consolidation, we're doing a cash out, then we might even consider doing that at a slightly higher rate.
Right. So how much lower does the rate need to go for me to say it's time to refinance?
So the question, I can throw the question back to you, is how much do you owe? Because if you only owe $50,000, you don't know how many people, Angie, that I talk out of refinancing. Mm-hmm. Why spend the money to save $14 or $15 a month? The break-even point is really like. Now, if you got a loan, maybe we look at 3 different examples today. Let's look at a larger loan of say $450,000.
Okay, so wait a minute. You just said break-even point. Right. So let's just stop there before we look at that. What do you mean by break-even point?
So there's going to be a cost to refinance. And if you
so
listen, there's always ads for no-cost refinance. So no, on that no-cost refinance, what the lender is doing is he's taking that interest rate and he's raising it. So he gets a bigger premium and he takes the money he gets for selling that loan and he's going to use that to pay off the closing costs.
Or he raises your loan balance.
Or well, then that's not a no-cost. So there's and that's very deceptive.
But I can still market it that way.
You better
money
not.
Out of your pocket, Glenn.
You shouldn't. Make sure you're comparing apples to apples and oranges.
All right, but if I owe $200 and it costs me $3,000 to refinance, I borrow $203. It's no cost, right, Glenn?
No, you paid $3,000 in cost. Even
part
you
of
know
the wealth
that.
building. It's just no money out of your pocket.
Exactly.
That's the deal.
And there, you could get a no-cost refinance, but instead of getting a rate at 7.25%, that rate might be 7.5% or 7.575%.
I see. Well, stop saying 7%. You're making my head hurt. I want to hear you say 6s. That's all I want to hear today. Yes, I wish we were in the
6s. So yeah.
So Glenn, let's just do a real scenario, like real numbers.
All right.
All right. Let's do that. So if I have let's just say I have a really small loan amount and it's $50,000, let's say, and the interest rates drop, let's say 0.25%. Is it worth it?
Probably not. How do I know? We do because we're gonna look at the current mortgage payment. Okay. And we're gonna look at the new mortgage payment. We're gonna subtract the difference. We'll come up with the monthly savings, and then we're gonna divide that by how much it cost us. So in this example, on a $50,000 loan, you're only saving about $7 a month, and if the cost was around $2,500, it's almost 30 years to make up that difference.
It doesn't make any sense at all to refinance, right?
Now, on a $250,000 loan, closing costs would be a little bit more, let's say $3,000. Dropping 0.25% might save you as much as $36 a month. So now you can make that up in a little less than 7 years. But here's where, on the bigger loan, and this is why, when does it make sense to refinance is, how much do I owe? What's my current rate? What can I get? A 0.25% drop on a $450,000 loan could save you $64 a month.
Right, and it would take me like how long if it cost me
less than 4 years? Yeah,
less than 4 years to make it up. So it could be worth it.
It could
depending on my loan amount size.
Right. Now
right?
let's look at a half percent interest
Okay.
on that same $450,000 loans. That's going to save you $127 a month,
Wow.
approximately.
And how fast can I make up that $3
A little
grand
less
then?
than 2 years.
Ooh, so now you're talking. Now you're cooking with gas, right?
Right.
So a 0.5%, a 1/4% may do it if I have the higher loan amount.
Yes. Now on a 250, which is kind of about where the average loan amount would be for
Right.
me, that's going to save you $71 a month, and you make that up in 3.5 years, and that's a real savings.
That's a real savings there. So that might be worth it, especially if
Right.
I wanted to maybe cash out or something.
Well, that's a
Or
whole.
then
That's,
I might have the same payment but put some cash in my
now on the
pocket.
$50,000 loan, even dropping a 0.5%, it's still going to take you almost 15 years to make it
I'm
up.
only going to save 14 a month. So
No,
when your loan amounts are under 100 grand, it's typically really not worth it unless they're significantly lower.
or there's extenuating circumstances. And I told you a
Sure.
story about a friend of mine had a smaller loan amount, but just couldn't get caught up. So
Right.
we were able to cash out a little bit. You know, we increased it a little bit. He skipped a payment. He got some escrow money back,
Right.
and it changed his life.
Yeah, it did for, and sometimes it helps you for a while, but you have to get your finances under control for that not to happen again. What we do see is people cash out refinance and get right back in the hole again.
Yes.
In
Use their
3 to 5 years, they're back in the same hole and they're pulling more cash. So
using their
we
home like an
don't-
ATM.
And
Right.
and talking about refinancing, we don't want you to use it like it is an ATM, and you have to be careful with it. I had a client one time. I set him up so beautifully. He had a wonderful little home. It was great price. He calls me 2 years later to sell it, and someone had talked him into a second mortgage on it and pulling out like $50,000, and now he was underwater because it was not in this time period of mortgages going up and up. It was like 2008, 2010, and we had a short sale of the house over it. So be careful.
Well,
You
and
talk
then
to
on the
somebody
other hand-
honest like Glen. He's not going to try to talk you into borrowing.
On the other
stuff
hand, my
that's in
sister wanted, she's at 7, I can't remember, she's going to drop about a 0.5%.
Mm-hmm.
So she's going to save in that $65 a month.
Mm-hmm.
But what she's going to do is she's going to pull out $20,000 and
Mhm.
she's going to remodel her bathroom. So she's going to increase the value of her asset.
So.
Her payment's essentially going to stay the same.
Mm-hmm.
And she's got a new bathroom and a house that's
There
worth
you
more
go.
money.
So just be careful what you do if you cash out on them. So we do have an app for this. It's called the HomeBot app.
HomeBot is so much fun, isn't it? It's one of my
It's
favorite
great.
things. It's like a website specific to your home that you can just play with.
And it's private.
Yes.
No one tries to sell anything. No one else sees it. There's no advertisements on it. But it will help you keep track of rates. And it will actually, if you have your loan balance in there, which if you had a loan with Guild, it's automatically in there.
Yes.
But you put your loan amount in there, and it will
show you
give
the
you
equity.
it'll show you about approximate home value. It uses an algorithm, so it's not 100% right. But if you talk with
great
us,
place to
we'll,
start.
Yeah,
Right.
we'll get you right. If you're like, well, that seems really low, then we'll go in there and manually change it. So now you know your equity difference between your loan and what your house is worth. And then if rates do drop, HomeBot will tell you, hey, if you refinance today, your new payment would be this.
Right. Or you can keep your payment the same and your new payoff date is shorter.
Right, shorten the term.
That's
Pay
a
off your
gr-
house
that's
in
a-
15 years
yes.
or 10 years or 20 years, whatever.
Right.
Down from that 30, that really does make a
Another thing
difference.
that we can do on these refinances people don't realize is we can keep the exact same term. So let's say you've got a 30-year loan, which is 360 months. You've been in there 5 years. You refinance. We can refinance that right at 300 months. So maybe you're not saving as much. So instead of saving 125, 130, you're only saving 100, but you didn't add any time back onto the loan.
Any time back on your loan, and that can really matter. So it depends on how long you're going to be in the home. If I
really
plan on
does.
being in the home at least 5 years, some of these scenarios are going to pay off. But like the one on the 250 with only $36 a month savings, it takes you 7 years to make that up. It's probably not worth it, especially if you're not going to be in your home 7 years. But if you're going to be in it 10 years, then these scenarios start looking a little different too. So it is specific to your, how long you're going to be in the home in your scenario. So Glen helps you look at the whole package there. Now, Glen, what if I got a loan and I didn't put 20% down? I've got this PMI now.
Yeah, so getting out of the PMI, that's just a bonus.
How does refinancing affect my private mortgage insurance, which is what PMI
So the mortgage insurance is calculated in increments of 5%. So we start with 3%, the mortgage is going to be a certain number. You get to 5%, that's going to go down a little bit. You get to 10%, it's going to go down a little bit. You get 15% to 20%, it's going to go down quite a bit more. So maybe
and at 20%
it goes
equity,
away.
it goes away,
It
right?
goes away.
Okay, so if I only put 5% down, and it's been a few years since I've owned my home, and I've had some
It's
price
been the last
increase.
few years. Yeah, you really.
Yeah, so let's just say I got a loan with only 5%
I'd have to say it's the greatest investment you ever made if you bought a house in the last 3 years.
It's true. So in the last 3 years, I bought a home, and I have PMI because I only put 5% down. So how does refinancing affect what I'm going to owe?
So we're going to reappraise that house, and on a purchase, we're going to go off the appraised value or the sales price, whichever lower. On a refinance, we're going strictly off the appraised value. What you paid for, it doesn't matter anymore. And we're going to look at that number. We're going to subtract out the current loan, and if it's less than 80%, the PMI is going to go down. If you put 5% down and we're at 85% now,
so now we got 15%,
the PMI is going to drop significantly.
So you're saying my house went up in value 10%, so I have a
Right.
$400,000
Paid
house.
its principal down a little bit.
Yeah, so I have a $400,000 house, and it appraises for 10% more, $440 now. Now I've got, and I put 5% down, now I've got 15% equity, and I'm barely going to be paying anything on my PMI.
And it's going to go away quickly too, because of
And-
mathematics, right?
Right, now does it automatically go away
It
when
does.
the loan balance just hits the 20%
does.
loan to value?
Right.
So as soon as I pay 5% more down on the mortgage, it's just going to disappear. I'm going to have
go away
another
quicker.
savings.
Right.
So when you're refinancing, getting rid of PMI or reducing your PMI can be a game changer too, and add to these savings. So let's just say I'm on the 450 scenario.
Now I knocked off another $50 in PMI, so now my savings is $114 a month.
Yeah, so the PMI matters too.
Heck yeah.
Now, what if I have an FHA or loan? I know I paid PMI a one-time fee that it got tacked onto my loan amount, and then I have a monthly though too.
You do.
So if I refinance FHA,
the PMI is going to stay on the loan. So typically when we're refinancing, we want to get out of the FHA into the conventional, if at all possible.
so if I do a streamlined FHA, it's not going to reduce my PMI.
No.
But if I have an FHA loan and you give me a new loan
That's conventional. Yes, win-win.
I can get rid of that monthly PMI.
Exactly, right. I always say FHA is a great tool to buy your first home, a great tool to buy a home if you don't have a big down payment and you don't have the perfect credit. But once you're in that FHA loan, if we can, and the rates come down a little bit, to get out of that FHA into conventional is what you want to do.
You could probably pay it off faster too, because
it's just a better loan. It's just a better loan. The
yeah.
PMI goes away. There's no upfront MI.
Yeah.
Yeah,
You
have a lot better
the
options.
private mortgage insurance is in case you default. It's an insurance policy really for the lender.
Exactly, it's exactly.
And
because
then,
before they had that, everybody had to save the 20% to put down.
Yeah, and that's why there's the misnomer out there that it takes 20% down to buy a home.
Right.
And this is why there's not.
Right.
So this refinance scenario is looking pretty good.
Right, and a lot of times you got to be careful because you'll see something on the radio or hear something on the radio, see it on the TV, and somebody will call you and you'll see, a rate that's outrageously low, and then you look into the fine print and there's $10,000, $12,000 in closing costs.
I have seen $10,000 to $12,000.
Right.
We're talking about $3,000 in closing costs, and maybe having to reset your escrow accounts up, which has your taxes and insurance in it. And so add that to it. But this 10 and 12,000, 15 grand. No,
you're right.
That's not wealth building. That's
No,
not wealth building
not at
for
all.
your
So
refinancing.
what I encourage you is get a hold of somebody that knows what they're doing.
Yeah.
That's going to spend time with you. That's going to give you a bunch of different options.
Right.
It's going to look at shortening the term, going to look at the cash out, going to look at your whole picture. If you have some credit card debt that you can't get rid of, you've been paying on it for 5 or 6 years, the interest rates are lower.
First, go to a 0% credit card before you refinance your house, though.
Yeah.
I can give you a list of that if you would like,
Yeah.
or try to put a link on this one on the 0% credit cards.
Not everybody qualifies for that, though.
Yeah, but you can try before you go to refi. But it can help.
Yeah, but it can. But just to look at the whole financial picture, not just the mortgage. And maybe you are in great shape. You don't have any credit card debt. You're comfortable with that payment. Well, then cutting 10, 12, 25, whatever, how many months off of the loan is huge.
I have done that before.
Yep.
Refinance from 30 to a 15. Well, thanks for joining us today on refinancing. If you like the podcast, please, give us a like, give us a share, follow, whatever it is you click on.
Awesome.
Click
Great.
on something.
Nothing makes me
Share with
happier
somebody
than doing
else.
these refinances because it can change the dynamic of,
Yeah.
of your
And
income.
hopefully we're going to see some of that soon in the next year or two. We're going to see rates coming down, and this is going to be something you're going to want to watch for. We'll also put a link to the HomeBot here, a link there. You can sign up. It's free app, and it's private, so you'll enjoy
Awesome.
it. A lot
Yeah.
of fun on there.
Well, thanks,
for
Nancy.
joining this week. We'll see you next week.